A lovely afternoon to everyone. This is Ms. Kurt back to welcome you once again for today's session of our webinar. Complying with the existing and applicable regulations is critical in running a business. Having enough knowledge and awareness on this ensures smooth business operations and avoidance of any penalties or sanctions. For today's webinar, we will specifically discuss economic substance regulations in line with the upcoming deadline for its filing requirement. This insightful session will provide valuable information about the ESR regulations and the necessary steps to ensure compliance, which will empower you to make informed decisions regarding your ESR requirements. Along with me is Ms. Mariam and Mr. Muhammad Sharik, who will be joining us in addressing the questions or queries that you might have during the session. As usual, the first half of the session would be for the discussion of the relevant topic for today. You may send your queries on the message box and we will have it addressed to the best of our knowledge on the second half of the session. So for the webinar pointers, first we'll be discussing about the economic substance regulations, applicable legislation, and the overview of the regulations, to be followed by the relevant activity or the licensees and accepted licensees, which is also meeting the economic substance test. This will be followed by the third point on the filing requirements, such as the self-assessment to be done, notification and report filings, and the deadlines to be met. Lastly, we'll be mentioning as well regarding the fines and penalties on failure to comply with the ESR. So what is ESR? Economic Substance Regulation was introduced through Cabinet Resolution number 31 of 2019 on 30th of April 2019. The regulations and guidelines was soon amended by Cabinet of Ministers Resolution number 57 of 2020 and Ministerial Decision number 100 of 2020 respectively. The UAE has once been on the European Union's list of non-cooperative tax jurisdiction. So as an action taken for this, UAE has introduced the ESR through the legislations that I have mentioned. This regulation mainly aims to combat harmful tax practices while complying with the global standards set by the OECD or the Organization for Economic Cooperation and Development Forum on Harmful Tax Practices. The ESR requires entities which undertakes any of the relevant activities to maintain and demonstrate a proper and adequate economic presence in the UAE relative to the activities that they carried out. So the regulation covers both onshore and offshore entities, regardless as to whether the income is derived outside or within the state. So with the regulation, with the ESR regulation comes the introduction of the relevant activities, wherein the entities undertaking the relevant activities was defined as a licensee. So licensee are those entities which undertakes a relevant activity and is either a juridical person or an unincorporated partner. So the relevant activity, the nine relevant activities that the decisions have specified are the banking business, insurance business, investment fund management business, lease finance business, headquarter business, shipping business, holding company business, intellectual property, and distribution and service center business. So it is possible for a licensee to undertake more than one relevant activity during the same financial period. On such cases, a licensee is required to demonstrate economic substance for each of the relevant activity that they undertake. Being actively engaged in this relevant activity is not necessary for an entity to be considered as a licensee for ESR purposes. So any form of passive income from relevant activity would bring the entity within the scope of ESR regulations. So first, we'll be discussing the entities having the banking business activity. So as defined under respective legislation, a banking business are entities which accepts deposits of money which may be withdrawn or that are repayable on demand or after a fixed period or after notice by check or otherwise and the use of such deposits. Banking business doesn't include entities exchanging foreign currency and remitting money, as well as financial intermediaries in the sale and purchase of domestic and foreign stocks and bonds, currencies and commodities and money market transactions. So insurance business are a business of accepting risk by effecting or carrying out contracts of insurance in both life and non-life sectors, including contracts of reinsurance and captive insurance arrangements. So these are regulated businesses by either the UAE Securities and Commodities Authority and BFSA for the AFC company or FSRA for ADGM companies. So it should be noted that the entity must assume the risk or termed as the regulated insurer to be within the scope of the ESR regulation. So insurance brokers, agents, and other UAE business providing insurance related to services that do not involve assuming all or some of the insured risks do not fall within the definition of insurance business, although they may conduct activities that fall into another relevant activity category for ESR purposes. The next activity is investment fund management business. So these are entities which undertakes or provide discretionary investment fund management services, including making investment, divestment, and risk-related decisions on behalf of an investment fund. So discretionary investment fund management services include making investment, divestment, as what I have mentioned, and risk-related decisions on behalf of an investment fund. UAE businesses providing fund administration, custodian, investment advisory, and other investment fund related services are not considered in an investment fund management business. The lease finance business, on the other hand, encompasses licensees that offer interest bearing, credit, or financing for any kind of consideration and includes financing to connected person. So the most important thing that should be noted here is that the credit or financing offered must have an interest that is being borne upon offering it to another connected person. So beside interest, consideration for the purpose of a lease finance business would also include origination and processing fees, gains upon conversion of a loan into the share capital of the debtor, and late payment penalties. So an example of this kind of business is just, for example, a company A lends 1 million AED to its subsidiary company B at a 10% interest rate per annum. So in respect of the interest-bearing shareholder loan made by company A, it is considered to be engaged in the lease finance business, specifically for financing. So the next relevant activity is headquarter business. These are businesses providing headquarter or higher management services to one or more foreign connected persons, but is subject to certain criteria. So such licensee takes on the responsibility for the overall success of the group or is responsible for an important aspect of the overall group's performance. In order for a UAE business to be seen as having taken on the responsibility for the overall or an important aspect of overall group success or performance, the services provided by the entity must involve the provision of senior management, the assumption or control of a material risk for activities carried out by the foreign group companies, or substantive advice in relation to the assumption or control of such risk. Moving on with the shipping businesses, these are entities which operate one or more ships in international traffic for the transport of either passengers, cargo, or boat. So the two key factors that has to be considered here is the entity must be the one who operates and the ship must be operated in an international traffic. So this could include activities such as the rental on a charter basis of ships, the sales of tickets or similar documents, the use, maintenance, or rental of containers, the management of the crew of the ship. So it should be noted that an entity will be considered as conducting a shipping business for ESR purposes only if the activities that I have mentioned undertaken by a licensee is in connection with the business of operating a ship or ships in international traffic. So travel agencies and international shipping agencies will not be treated as carrying on a shipping business merely on the basis of selling tickets to passengers for international travel by ship. The next one is the holding company business. So for a licensee to be considered as holding a company business, a licensee will be regarded as having a holding company business only if it meets the two conditions as what is mentioned on the presentation. So the first one is it must has its sole function the acquisition and holding of shares or equitable interest in other companies, as well as it only earns dividends and capital gains from its equitable interest. Moving on with the intellectual property businesses, these are entities which holds, exploits, or receive income from the intellectual property assets. So an intellectual property asset can be defined as any intellectual property right in intangible assets such as copyright, patents, trademarks, brands, and technical know-how, from which the licensee earns separately identifiable income in the form of royalties, license fees, franchise fees, capital gains, and any other income from the sale or exploitation of the intellectual property asset. So hence, it should be noted that merely owning an intellectual property asset doesn't bring a business within the scope of ESR. So they must also earn or receive identifying income from identifiable income from those intellectual property assets. The last relevant activity is the distribution and service center businesses. So these are licensees that only purchase or distribute goes to third parties are not considered engaged in distribution business. Likewise, licensees that are engaged in the business of providing services to third parties are not considered as carrying on a service center business. So the distribution and service center business are those entities which purchases raw materials or finished products from a foreign group company and further distribute those or providing services to foreign group company as well. So from what I have mentioned, the key factor to consider here is the entity's transaction should be with a foreign group company to be considered as distribution and service centers for ESR purposes and not only with UAE entities company. Now we will be moving on with defining the exempted licensee. So ESR excludes some entities from the requirement to meet the economic substance test, which is also one of the requirements under the regulation, and give the benefits of a reduced filing requirements as long as any of these four conditions that is presented on the presentation will be met by the specific entity. So the first one is investment funds. The ESR regulations define an investment fund as an entity whose principal business is the issuing of investment interest to raise funds or pool investor funds with the aim of enabling a holder of such an investment interest to benefit from the profit or gains from the entity's acquisition, holding management, or disposal of investments, and includes an entity through which an investment fund directly or indirectly invests, but does not include an entity or entities in which the fund invests. So by saying directly or indirectly invest means its sole function is to facilitate the investment made by the investment fund. The investment fund itself is not considered an investment fund management business unless it is a self-managed fund wherein the investment manager and the investment fund are part of the same entity. So for the next condition, these are any entities wholly owned by residents in the state but is subject to certain conditions. So this condition is the entity must not be part of any M&E group. All of its activities are exclusively carried out in the UAE or within the state. And lastly, UAE resident owners of the entity reside in the state. The third condition is those entities that are tax residents outside of the UAE. So in order to avail of this exemption for this specific condition, the exempted licensee must be subject to corporate tax on all of its income from a relevant activity by virtue of being a tax resident in a jurisdiction other than the UAE or other than the state. Lastly, branches of foreign entities which is already taxed outside the UAE can also be considered as an exempted licensee. So an entity is not required to meet the economic substance test if such entity is a branch of a foreign entity and its relevant income is subject to corporate tax in the jurisdiction where such foreign entity is a tax resident. For exempted licensee, they are not required to meet the ASR test and report filings. However, a notification must still be done along with supporting documents, supporting their claim as an exempted licensee, and further submits necessary supporting document in relation to the condition in which it is considered to be exempted. So if an entity will be considered a licensee for economic substance regulation purposes, it must demonstrate economic or it must meet the economic substance test as I have mentioned a while back. So as I have mentioned, any licensee that carries out relevant activity and derives relevant income from a relevant activity during a financial year is required to demonstrate sufficient economic substance in the UAE proportionate to the nature of the relevant activity and the amount of relevant income derived from that specific activity. So from what is presented on the screen, there are three specific tests that an entity must meet to be considered as meeting the economic substance test. So these are the CIGA test, advocacy test, and directed and managed test. So for a licensee to be considered as meeting the economic substance test under the CIGA test, this they must consider the core income generating activity. So the core income generating activity refers to the activity that can be considered as of central importance to the licensee for the generation of the gross income earned from its relevant activities. The adequacy test, on the other hand, refers to having regard the level of relevant income from the relevant activity undertaken. A licensee must have an adequate number of employee, like a qualified number of employee, having enough expenditure, as well as having enough or adequate physical assets. So as such, there is no specific figures to determine the adequacy of this on the licensee, since it totally depends on the level and nature of the relevant activity carried out by the licensee. Moreover, a licensee must ensure that a sufficient documentation or records are maintained to demonstrate the adequacy and appropriateness of the resources and assets utilized and expenditures incurred as well. So the last one is the directed and managed test, which aims to ensure that a relevant activity is directed and managed in the UAE and requires that there are an adequate number of board meetings held and attended in the UAE. So the number of board meetings held to make strategic decisions must correspond to the relevant activity that is being carried out by the specific licensee. For an entity that is considered a licensee, they must also comply with the filing requirements under the ESR. And before doing so, it is advisable that an entity must do an assessment or a proper assessment in which they must adopt the substance over form. So entities are expected to use a substance over form approach to determine whether or not they undertake a relevant activity, and as a result will be considered as licensee for the purpose of the ESR regulations, irrespective of whether such relevant activity is included or specifically stated in the trade license or permit of the entity. So this determination would require the UAE business to look beyond what is stated on their commercial license to the activities that they have actually undertaken during a specific financial period. So it is recommended that the entities perform assessment for each financial period and should take into account the activities undertaken by the licensee at any time throughout that relevant financial period. Further, it is also mentioned on Ministerial Decision number 100 of 2020 that if a business is unable to determine whether it conducts a relevant activity, such entity should seek a professional advice to have a proper assessment. So, basis on the assessment that is done by the entity, it would determine whether they would only need to submit notification or they would have to proceed with both the notification and the report. So for submitting economic substance notification, every licensee as well as exempted licensee are required to submit their notification filing stating the relevant activity that is carried out during that specific period. So notifications should also set as to whether a relevant income is generated and state the financial year considered thereon. Exempted licensees notification must be submitted with the sufficient supporting documents evidencing their status as an exempted licensee. On the other hand, economics substance report must be submitted by a licensee who carried out a relevant activity during the specific period and further earns relevant activity or further earns relevant income for that specific period. So the report should include relevant activity, the amount and type of relevant income, operating expenses, and assets in respect of the relevant activity carried out, place of business, and number of employees and personnel, their core income generating activity, a declaration as to whether it meets the test, as well as their financial statement. So the submission of deadline for filing the ESR notification is usually 6 months from the end of the fiscal year that the company is adopting. On the other hand, ESR reports are submitted within 12 months from the end of the entity's fiscal year. So a licensee's financial period should correspond to the period for which financial statements are being prepared. So for this specific month that we have, the notification filing deadline will be covered for those entities adopting a fiscal year ending 31st of December 2022. So on the other hand, a fiscal year or entities having a fiscal year ending on 30th of June 2022 must submit their ESR report filing by the end of this month. If an entity or a licensee fails to submit the necessary filing requirements that is required under the ESR regulations, there's a corresponding penalties that they will be receiving from the respective relevant authority. So failure to submit notification before the deadline would incur 20,000 AED penalty. And if the licensee or exempted licensee provides inaccurate information to the regulatory authority, although they have already submitted it, they would still have a penalty of 50,000 AED. So failure to submit the ESR report, on the other hand, and any relevant information or supporting documents would incur a penalty of 50,000 AED, and the same amount would be incurred for any inaccurate information submitted during the economic substance report. So that's it for the discussion of the relevant topic specifically related to ESR. You may now send your question or queries in the message box and we'll have it addressed on the second part of the session.